Yo, what's good, YouTube? It's your boy ZC Trades, and today we're going to be talking about the basics of a fair value gap. Now, this was a requested video. This won't be a long video. This is just the basics. So let's jump right into it. So what is a fair value gap? To understand what a fair value gap is, we have to understand how price is supposed to be delivered. Price is supposed to deliver buy side as well as sell side efficiently. Buyers and sellers are supposed to be able to get into the market with the same amount of ease, but it's not always like that. And when it's not like that, we get inefficiencies. For example, on this left hand side, you see that more sellers were able to get into the market than buyers at a certain time. On the right side, you see more buyers. We have more buying volume than selling volume in the market, creating an inefficient market, which is why price must rebalance these things. Here on the left hand side, we get this wick right here, which is the high of this candle. Whatever time frame this candle is, this is the high, and this is where the candle closed at. This is the high, this is where the candle opened, this is where the candle closed at. This is the low of this candle. Now if we go to this candle up here, this is the low of the candle, this is the close of the candle here, this is the open of the candle, and this is the high of the candle. Now when we see gaps like this here, these are called fair value gaps. These fair value gaps come in all different variations, a bunch of different variations. We have fair value gaps, SIBIs, we have BISIs, we have inversion fair value gaps as well. Now also today I want to give y'all a little extra sauce for whatever your recipe may be, and teach y'all about the consequent encroachment and how to use that on fair value gaps, SIBIs, BISIs, and inversion fair value gaps as well. So the normal fair value gap is pretty self-explanatory. Anybody can look at a chart and point out a fair value gap, but I'm just gonna go ahead and I'm gonna do it anyways. We have a fair value gap here, we have another one here, we have one here, here. You're gonna see fair value gaps all over your chart, everywhere. Price is constantly being delivered efficiently, then inefficiently. Here's an inefficiency as well. We have a fair value gap here, fair value gap here, here. Constantly, you're going to see them all over the place. All right, so now I want to dive into the SIBIs and the BISIs, because this is just a little bit more technical. SIBI stands for sell side imbalance, buy side inefficiency. BISI stands for buy side imbalance, sell side inefficiency. If we scroll back up here, these fair value gaps are just imbalances. There's more buyers able to get into the market than sellers, hence buy side imbalance. Here there's more sellers able to get into the market than buyers, hence sell side imbalance. So a sell side imbalance, buy side inefficiency is a 3-candle pattern. Now we want to see a bullish candle, bearish candle, 3 candles, but we want to see this fair value gap being left. A lot of times we call something like this, if we see a rapid candle and it's more of a big body candle, I like to call them, then we call that displacement in a SIBI or a BISI. This is quite literally the same thing as a fair value gap, except we take entries off of them over here. Okay, so I'm gonna mark this up as a SIBI. I'm gonna go ahead and I'm gonna mark this up as a BISI, and it's essentially the same thing as a fair value gap. The only thing is different, I know you guys notice, we have this block here, we have this block here. On the buy side imbalance, sell side inefficiency, we want to see a bearish block before the fair value gap. On the sell side imbalance, buy side inefficiency, we want to see a bullish block before the fair value gap. Now I'm going to jump into my charts. I'm going to show you guys this as well real quick. This is a BISI, this is a SIBI here. I'm going to mark this up. This is a SIBI, this is a BISI. Let's go ahead and keep going. We have a fair value gap here, and even if you look on a 15-minute chart, we have a SIBI right here. Price is fractal. Now let me explain. If you see a SIBI on a 15-minute, you drop down, you see that a SIBI in the 5-minute in the same spot as the 15-minute. That is a valid zone to look for your market structure shift in if you watch my easy 5-step strategy video. Let's check it out. We see a BISI here, buy side imbalance, sell side inefficiency. We see another one here. We see another one here. It's a fair value gap. We have another BISI here. We have a SIBI here. Now, like I said, if you guys can't tell, with the proper bias, with the proper target, with the proper strategy, you can use these for your own excellence or your own demise. You're going to see SIBIs, you're going to see BISIs everywhere you look on the chart, every time frame. The higher the time frame, the more important of an area that is. The lower the time frame, the more redundant. If you see this right here on a 15-minute, you drop it to a 5-minute, you see a SIBI in the same place, which we did. We saw one right here. You go into this area, which let's just do it. It's not our time to trade, but you go into this area, you look for your market structure shift, which is a SIBI or a BISI being rebalanced, then being violated by displacement, which we have right here in this small amount of price action. Then once you get the displacement, you look for a entry within a discounted or premium price range, and this would have been your entry. Where your target would have been, I don't know. This is just hypothetical. Since I see one of these, I just want to jump into this really quick. We have a volume imbalance here, which is essentially no price action here in between these two. No price action at all. These right here must be returned to. They must be rebalanced. Hence why you see this manipulation, this huge wick come up and knock it all out before price comes back and goes back in its intended direction. These are volume imbalances. These are areas where you won't see any type of price action. Let's drop it to a lower time frame, 30-second. You'll see more of it. These must be filled in. These are literal gaps. We have fair value gaps and we have literal gaps. They are called volume imbalances. Volume inefficiency, because there's literally no volume. That's extremely inefficient for the matrix of price action. Now I want to jump into inversion fair value gaps. So let's say you have a SIBI or a BISI. This is why I say you need to have a narrative. You're expecting price to buy up off of this BISI here. You're expecting price to just bounce off of this and continue in its direction. Instead, price runs right through it. Now we have something called an inversion fair value gap. Now these are one of my favorite things to use because you have a inefficiency stacked on top of a inefficiency. Both of these must be rebalanced. So these act as a trampoline for price action. So you would want to see price come back up and respect this area here. The same thing in this scenario here. When you have a SIBI, you would think that price would come up and react off of this and go lower, or maybe you don't think that, but it doesn't either way. And price just runs through it and leaves an inefficiency on top of this inefficiency here. Even if it doesn't leave an inefficiency on top of this inefficiency, we still want to leave this inversion fair value gap marked up because price will most likely use that as some type of support in this scenario. Okay, so let's jump into the charts and I'm going to show you guys this. Okay, so case study A, right? Now this SIBI wasn't rebalanced. I want you guys to take a close look at this. This bullish candle doesn't always have to be the first candle. It can be the last candle and we still have a inefficiency in here. Now this inefficiency was almost rebalanced. So we'll go ahead and we'll move our gap to right here. And even still, price comes back to this inversion fair value gap. Why? Because it was left inefficient. And we see how the bodies respect this inefficiency as well. Now let's go ahead and let's move on to another example. Okay, so we can use this as an example right here. We had this inefficiency here, and then we have volume imbalances and wicks and all type of nasty mess up in here. But look at how price comes and reacts off of this inversion fair value gap. Let's roll on to another example. Here we have a SIBI. This SIBI was not rebalanced at all. It was actually ran through by a BISI. We see price come and respect this inversion fair value gap as well. Now these inversion fair value gaps are powerful, especially when there's a SIBI and a BISI, or a BISI and a SIBI sitting on top of each other. They're very, very powerful. Okay, cool. So now I want to give you guys some sauce about the consequent encroachment of these gaps. Price is usually respecting the consequent encroachment. Let's get some examples, right? Okay, so this is a perfect example right here, right? So here we have a SIBI. I'm going to take my fib from the bottom of this bullish candle and put it to the top of this bearish candle. And you can see the equilibrium, the 0.5, the consequent encroachment is perfectly respected. Let's go ahead and get another example. Okay, cool. So right here we have another fair value gap. Let's mark up the consequent encroachment. If consequent encroachment fails, optimal trade entry usually does the job. Now I want you to pay attention to how the bodies respect this 0.63 area so perfectly. Now let's go ahead and go on to another example. Here we have another fair value gap. Check this out right here. Perfectly respects consequent encroachment. Now also I want you guys to pay attention. We have this inversion fair value gap. We have this fair value gap here. However, this fair value gap was rebalanced up to the top of this wick. Then we have another imbalance sitting on top of this. So look what price does. Now let's check and see where price respects in this inversion fair value gap. We perfectly respect the optimal trade entry, 0.79 area of the fib. Let's go ahead and get one more example before I roll up out of here, y'all. Alright, okay, perfect. So we have this fair value gap here, this huge imbalance on the 15-minute candle. Now let's take our fib and drag it across this gap right here. Why do the bodies perfectly respect the consequent encroachment, man? So look, if you guys ever use a gap as a take profit, you can get a little bit more out of your position by setting your take profit at the consequent encroachment of that gap. Sometimes price will just go into the gap a little bit and then continue about its way, but most of the times price is going to at least touch the 0.5 on that fib, the consequent encroachment, the equilibrium of the imbalance. Okay, that's about all I got, y'all. I'm gonna get with y'all on the next video, man. Peace.